Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 8th of April. Starting off with the FTSE 100, which seems to have continued to find support near 78.90, which is the floor of that bull flag. We're hoping it's a bull flag, not a reversal formation, and above 78.90, looking for as high as 81.30 as soon as the end of this month. It was a rather punchy call given the track record of the FTSE, but you never know. On the downside, if we do break 78.90, then 7800, 77.90, the old December to March resistance could be on the cards. Worst case at the moment is the 50-day line and the floor of that channel from December, 77.25. But we're looking north still to record highs, which sounds rather unbelievable. But there we are. Moving on to the DAX, and here are some recovery. We've bounced basically at the old resistance area, 18,100 above that. Still looking for a journey to the top of the rising trend channel from October, as high as 19,000, maybe as soon as the end of this month. In fact, you can see that line extends up to 19,500, which would be the target for the end of next month. If we do break down, then not looking for anything lower than the 17,800 area, the floor of that channel, which hopefully would also be where the 50-day line is by the time that happens, if that happens. Next up is the Dow, and here you can see that we've had that bounce just from below the 50-day line, so it's a bear trap rebound from below the 50-day moving average. Still higher lows there than back in March, which was around the 38,400 level, so that's a plus for April. And looking for the market to at least have another go at 40,000 while we remain above the March support. Moving on to Bitcoin, which seems to be ready for a new leg to the upside. The reason for saying that is that we've got a break of the March resistance line there at 70,700, above that on an end-of-day close basis. Looking for the top of that rising trend channel. Probably that's a bit steep, actually, but let's say still it's 80,000 plus target as soon as the end of this month. If you're cautious, I suppose you might be able to delay that prediction to the end of next month, but could actually get up to 80,000 plus sometime during April with the halving on its way. If we do break down 68,000, the floor of the channel there from January, and the 50-day line 64,600, the worst we're expecting at the moment. Moving on to gold, which has been a solid play in the recent past, and pushing to new highs. We were looking for 2380 by the end of this month. It looks like we might get it even by the end of this week, the way things are going. So really soaring now after spending so much time log jams near 2000. On the downside, not looking for anything lower than 2250, which was that mid-March peak, 2246 to be precise at the moment. But ideally, we now stay above today the latest intraday support, 2286. Moving on to crude oil, which I looked at yesterday, and just giving a reminder really that we've got a golden cross situation here above that broken resistance line there from last year, September last year, around 84.40, looking for up to 95 initially, which was September resistance, and then as high as 105, maybe by as soon as the end of next month. So keep an eye on all those oil stocks. On to the stocks themselves, and starting off with Helium Metals, which hasn't appeared here for quite a long time. Maybe the chart will tell you why, but here we got a potential broadening triangle base. The rally here, if we have one, would be up towards the top of that triangle from December and through the 200-day moving average around 0.22. So 0.25 the best. What if we get an end-of-day close above the 50-day moving average at 0.16, but obviously not looking for any new lows in the meantime. On to Argo Blockchain, which is certainly something of a head-scratcher at the moment. Difficult to know whether we're consolidating ahead of a move to the downside or a fundraise, etc., or the upside. But looking at the chart as it is, basically we've broken a line of resistance there from back in January. You could argue that the line is actually more like that than the line I'd previously had there. But whatever the case is, we've broken a line of resistance there around 13.5 pence. Above that, looking for resistance on the way down as high as 17 pence, maybe over the next couple of weeks. But obviously, we don't want to see any end-of-day close back below that 200-day moving average, currently at 12.5 pence. Haven't looked at Bango for ages, maybe years, and here you can see we've got one of our favorite setups, the bear trap island reversal, so gapping down and then gapping up after new lows, and the view at the moment is while we're above March resistance around 111 pence, we could hit the top of that rising trend channel from January up to £1.45 as soon as the end of next month or even sooner. So something to think about there. I haven't looked at Cora for ages either, and you'll probably see from the chart why, but here we've had a gap to the upside through the 50-day moving average. If we can get end of day close above that 50-day line 2.05, we could be up to the 200-day moving average at 2.5 pence sometime later this month. But the proviso is there that we need to stay above the 50-day line and ideally close above the October support 2.15 to feel more safe. That is actually a bear trap rebound in place. Another stock making a long awaited return is Byotrol, and here difficult to see what is actually going on there, but what the message is at the moment, that we need to have an end of day close through 0.1 pence, which obviously we failed to do on 4 sessions, in order to get the shares up to, let's say, 0.2 to 0.3 to the bottom of that gap down that we had last month. But clearly that one is not for widows and orphans, given that it's already made probably quite a few of them on its share price trajectory. Looking the other way at the moment is E-Star, and we've nearly hit our target there at 2.9 pence. I think the high today 2.85, but no one's perfect. End of day close through 2.95, and we could have a new leg up to 4.3 pence, perhaps by the end of this month. There's a punchy call target there. Ideally, we stay on the right side of the 2.4 pence area, or 2.5 pence area actually, which was the initial April resistance. The reason we like this situation is there was an unfilled gap to the upside off the lows. So that is a tick, as is the way that both the 50 and 200-day lines are now rising. So effectively a golden cross situation. On to a stock which I covered recently, and that's hit the first target here around 1.98, or at £1.98. Above that, we're looking for as high as £3.20 by the end of next month, which, if that happens, one will be very impressed and delighted. The other reason for liking this setup is that we have another bear trap island reversal, so gapping down and then gapping up off the lows, and that tends to be a strong signal, as it has been already. Genflow is next, a company that I interviewed at the end of last week, and here that interview seems to have woken the shares from their recent slumber. The key here is to stay above the March resistance around 1.6 pence, and above that looking for a retest of the January resistance at 2.2 pence, maybe by the end of this month, although as you can see in the recent past most of the rallies have been sold into, so we want to see the shares remain above that 1.6 pence resistance zone. Moving on to Helium 1, where we had a prediction that the shares would touch the 50-day moving average. Unfortunately, so far, they haven't quite done it. The 50-day line around 1.7, well, basically around 1 3/4, the high today 1.62. We still want to see the shares remain above the resistance line there from February at 1.3 pence to get our 1 3/4 pence target. After that, hopefully we'll be off to a 2 pence to 2.5 pence trading range by the second half of April, but the key there holding above 1.3 pence. Next on the list is Mirriad, where you can see there's progress within this rising trend channel base, which has been in place for rather a long time, much longer than you normally expect, from July, but we had that unfilled gap to the upside off the lows back in March, and currently a decent rebound off the 200-day moving average and above a rising 50-day line there at 1.6 pence. The longer we stay above the 50-day line, the greater the chance of move to 3 pence, hopefully well before the end of this month. The other point to note is that rebound off RSI 50, which looks quite juicy if you are of a bullish perspective. Next up is Novacyt, which we also haven't looked at for quite some time. Here the situation is that we've had a trendline break, and basically that's already happened back in March. Initial target there, as would normally be the case, the 200-day line at 55 pence. Above that, there's a gap to fill up towards 62 pence, which we would hope would be done well before the end of this month. Ideally, we stay on the right side of the 50-day line there at 46 pence, but it is early days, and the shares unusually illiquid if you look at the candles that we have there at the moment. On to Oriole, which We have also not covered for a little bit now. Here we've got a rising trend channel. That's quite a long-lived one there, been in place since basically this time last year. We've pushed through the 50-day line at 0.31, and above that looking for the top of the channel there as high as 0.58 as soon as the end of next month, or maybe even sooner. You see that we gap down there the end of February, beginning of March, and that has been filled. That gap close was done at the end of last week, so looking encouraging, especially if we can get that 50-day line to curl up a bit more and join the 200-day moving average in rising. On to one of the recent successes here at Tungsten West in terms of the share price. Hit our original, well, actually hit both our targets. The first target there at 1 3/4 pence, the second one there at 2.9. We also filled the gap there up to 3 3/4, which means us struggling to find what the next target here could be. And judging by the trajectory, the next level up is going to be up towards the last resistance on the way down around 5.3 pence, and hopefully we'll get that over the next week or two. The big prize would be to fill the gap up to 10 pence, but maybe one shouldn't get too excited at this stage, even though it's been a great turnaround. The start of the rally there, the unfilled gap to the upside through 1 3/4 pence that we had last week. Moving along to Upland, which has exceeded expectations, and the last time I looked there was no actual new news, so rising sharply on no news is normally a very good thing. Here we've got 4.85 pence as the initial target, and that should obviously be hit hopefully this week. Next target up to as high as 6 pence, the upper parallel of the rising trend channel from back in August. Moving on to the last two, the first one is Union Jack, and here we hit a first target there at 21 1/4 roughly. Next level up to 24 pence hopefully, or 23 3/4 pence, well before the end of this month. After that hopefully we could have a proper rally back up to the 30s. Finishing off with Zephyr, which has also been covered here ad infinitum. Here we're going into a V-shaped bull flag. We've got the 50 and 200-day lines rising, and the initial, the second target there up to 5 pence. Above that, we're also looking for what the next level up could be, and that would stem from a February resistance line projection from last year as high as 6.4 pence, hopefully well before the end of this month. Ideally, we stay on the right side of 4 pence in the meantime, but as we're going into a golden cross, we have high expectations of that one. That's it for me today. More updates tomorrow.